Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. All right, welcome back, my fellow traders. Today is Sunday, the 2nd of November, 2025. Time is about 9:10 a.m. New York time. And as usual, is a weekend. I like to share my analysis on the dollar index, Bitcoin, NASDAQ 100, XPX 500. I shall also look at gold and silver in this analysis session. I'll try and make it as fast as I can so you can have time to do your own analysis as well as trade. All right, so let's start with the dollar index. Again, this is not financial advice. I don't recommend you buy or sell anything here. It's just giving my bias on the market and what I think is happening. All right, so the dollar index, ever since we had this sharp reversal candle, is in an uptrend on the weekly chart. um Stepping into the daily, let's quickly look at our weekly indicators. So RSI is in positive territories, strong strength, behind the move on the weekly. Stochastic is also hitting close to cycle high, but we're not there yet. Tells me there's still more move to the upside even on the weekly. MACD, and this is regular MACD, showing strength to the upside, solid green. Of course, our MACD lines are still below zero, so that's caution there. Tells me that this move is not necessarily, um, it's more like a retrace or a corrective move that I'm looking at. But if MACD lines cross the zero line, I wouldn't look at it in that perspective any longer. I would see it as a new impulse wave continuing itself. So I'll be watching that and update you once I see it. But for now, we are examining a corrective move on the weekly chart. All right, so indicators support our idea. And on the weekly, so far, we've done a retrace of, I think this about the 0.236. I didn't mark it, but I think this is the 0.236. The 0.33 or 38 level on the retrace is somewhere around here. And that's where I'm expecting at least the dollar index to ultimately reach. So we go week by week, every week might be slightly different. But since we close with a solid green candle on this weekly chart, I do expect that by the end of next week, we would make another green candle. And my target for next week is somewhere within, our first target is this liquidity zone. We need to smash through this zone first, and I'll show you on the 4 hours when we get there. And then also we need to smash through this what do you call it 50 period moving average level, and that gives us our head and shoulder target, right about our head and shoulder target before our ultimate target. So we got to take it one step at a time. Let's go to the daily chart and see what the daily chart looks like. And the daily chart, we having three matching soldiers, solid green candle, good volume supporting it, so I do expect a continuation on the dollar. Indicators are showing the same strong RSI, stochastic cycle. We haven't hit a cycle high and turning yet. MACD is showing some weakness, but it could be also the beginning, because here and here is a divergence. Let's keep that in mind. So regular MACD is showing some caution, and this is why I think when price hits that liquidity level, we probably will get a pullback from that level before our continuation. So keep that in mind. Risk management should always be in place. Again, as you can see on the daily chart, this liquidity zone is a confluence also of the 200 EMA. All right, so this is why I'm thinking once we hit this 200 EMA corresponding to this liquidity zone here, we probably will get a pullback. And pullback, I'm expecting a support at this level or somewhere around this level, before we continue our journey up. But ultimately, yes, I'm expecting these targets to be hit in the next coming week. 4 hours to conclude our analysis on Dixie, and already you can see 4 hours we hit Fibonacci 1.618 target level, and we're already showing weakness here. So there's a possibility, a likelihood that when market opens early this week, as volume is also seeming to be thinning out for the bulls, we could potentially get some pullback, some little discount. Probably, who knows? I don't know how far the discount will come, but I'm bullish on it. I'll use any pullback as opportunity to reload for long. So I can't really examine this pullback on the hourly. As you can see, we already have a bearish engulfing candle. So yeah, pullback is expected on the dollar index. Cycle is also high on the hourly chart, suggesting that yes, we'll probably either finishing our pullback or we'll get another few hours of a move down. Who knows? Probably to the 21 EMA on the 1 hour chart. But either way, a pullback will happen. But bullish overall by the end of the week is my projection on the dollar index. The next asset I like to look at is Bitcoin. All right, so Bitcoin is also doing the distribution corrective patterns, and it's getting quite complicated so far. But last week, this is where we were. Last week, we were somewhere right here. And like I was saying, I was looking at this critical level. Fortunately, we did come to this critical level with rejection here, shooting star here. If you go to the daily was a signal for me. Once we hit this daily shooting star, I did form this head and shoulder pattern on this chart. And I realized, okay, if we're not going to make it past this level, which is the critical level any longer, then definitely this is a head and shoulder pattern I'm looking at with a slanting base, which suggests more downside price action. So here's the head, here's the left shoulder, here's the right shoulder. So our invalidation level of Bitcoin is this right shoulder. If price should ever make it above 117,000 thereabout, then it invalidates all the targets to the low side. But while this pattern stays in place, supported by indicators on the higher time frame. So if you go to the weekly time frame, and for me, that's the only signal I'll be looking at to change my perspective on Bitcoin. Yeah, you could get some fake outs, but as long as the weekly hasn't changed, we stay in there. Because on the weekly, MACD is solidly down. It's increasing in strength, as a matter of fact. Okay. The only thing is that our MACD lines are still above the zero line, signaling that, of course, the trend is still up for those who are looking at it from that perspective. But the divergence is solidly on there. You look at this, and now we are now way down. So once this changes, we will change our bias as well. But until then, the daily pattern that we see here is only giving you an opportunity to either offload your longs if you have longs to offload, or maybe just hold out and see. But I don't do wait and see. I think once the daily MACD histogram bar ticks below zero here, we will be on our way down to the downside. So this will be another signal I'll be watching out for as this daily chart plays out. Other than that, yes, I think all the downwards target are in view. My initial target, as I've always said, is somewhere around right here, 102, and then ultimately the 96, 94 is the mark area that I'm also looking at. All right, so that's my take on Bitcoin and the crypto world. I would like to look at the equities next. And I'd like to start the analysis of the equities market, looking at the NASDAQ 100 first. So the NASDAQ 100, I think if I go down to the 4 hours, then I can pick up where we started off last week and see where the dies failed and what this week would look like. So last week, this is where we were. We had broken out of this resistance level, which I marked here as important break. And my analysis was to wait and see if we do come test this level before going up. Unfortunately for me, all right, it's not unfortunate because my capital is still intact. I didn't take a trade on the NASDAQ. I stayed off the sidelines. So this whole move went without me, and that's fine. Um, this gap that was created happened on Sunday into Monday. So we didn't even get a revisitation. We just had volume come in and it just went up. So this gap here is still existing. I don't know whether we would fill this gap or this is just going to be a runaway gap. It looks to me like it's one, but for me to go long on bit on Nasdaq 100, I would want to see price come back to this invalidation level. So if you do come back above 2600, 149, 26,149 thereabout, this whole resistance level, if you get a candle open and close here, I'll go long because on the monthly chart, okay, so there's a monthly chart on the Nasdaq 100. We close with a solid green candle. Now, of course, on the monthly, we are quite stretched. We are quite overextended. As you can see, we actually closing way outside our Bollinger Band as well as our KC channel band. Yeah, therefore, whilst the tech world is still rallying strongly, this is becoming a little bit unsustainable without a pullback. So my analysis on the Nasdaq is a pullback to a certain level, and I think the Nasdaq is still going to rally up because we closed this month with this green candle. If we get a pullback, we're probably going to make it to this target 26 477, and potentially ultimately we'll hit this target here at 28,205. But let's go week by week, month by month, and see where we get to before we call the rally or the bullish rally over. Yes, so this bullish rally began with this hammer that occurred in April, and we have been on it till now. So on the daily chart, as I was showing you, we have some bearish candles forming, suggesting the pullback that I'm also looking at. Now, how far this pullback would come to is what I'll be watching for in this coming week. You know, we already closed with the red candle here. And that's what I'm saying. I'll only go long if we get a candle open and close above my invalidation level, which is right about the 26, 152, 155, even 149 thereabout. Okay, so that's my signal to go long, which means we're going to go into a parabolic move towards those upper targets I showed you on the weekly chart. But other than that, I expect this gap to be closed. A pullback probably to this level to close the gap, and if support is found here, just like I was saying last week. I see any reversal candles from here. Yeah, probably we're buying the Nasdaq for long. But other than that, it's more or less pulling back. Potentially could be the end of the move, but we'll have to go day by day and week by week. The reason why I say potentially could be the end of the move up is because of this candle. This is kind of a reversal candle, but it's not a strong reversal candle because we closed at least about almost 50% of the length of the candle. That tells me both buyers and sellers are at equilibrium. So you know, caution if you want to take a short, but I'll stay on the sidelines, wait for confirmation before I trade the Nasdaq in the next coming week. Let's look at XPX 500, see if the story is any different. Okay, so this is a chart of the XPX 500 on the weekly time frame. And this is not looking good for SPX 500. It doesn't look good. With this candle, doji candle on the weekly chart, kind of more like a gravestone doji almost. Long wick, small body, volume is big, tells me somebody was selling, taking advantage of the gap up to offload, their stocks, whilst maybe retailers were chasing the move. Again, this also has a gap up on it, and I would I would I would I would play caution on SPX 500 as well. The reason is the trend is still up. We don't have a reversal yet, so if you want to go on the lower time frame and take some short positions, sure, but long term wise or weekly wise, the trend is still up. So be careful when you are taking a short on SPX 500. But this candle here is not spelling good news on XPX. The only thing that are in good favor of XPX on the weekly time frame is, of course, our MACD hasn't crossed down. MACD histogram bars are still up. We're looking at cycles wise. Okay, cycle low. We haven't yet hit our cycle high. But again, what I'm noting about the cycle here is that this and this is a divergence. All right. So potentially the only thing is it would take a whole week for us to know whether this divergence is going to play out or not. I'll look at the daily and see if we get some signals from the daily. But based on the weekly, we also do have an unconfirmed weekly RSI divergence. This is our previous high. We've made a gap up higher high, and look at where your RSI is. So again, all these are reversal signals. The only thing is they are not confirmed yet on the weekly setup. So it to be a little bit of a high risk, high reward if you want to take a short position on XPS 500. I think the same thing applies also with the Nasdaq 100. But again, like I was saying, because the weekly hasn't given us confirmations, this would be high risk, high reward trade if you want to trade the downside. But it's best to be cautious, and if you want to stay on the sidelines and wait for confirmations, a week will give us the confirmation that we need, as well as whether we should continue trading long or hold a short position. Stepping into the daily chart, and as you can see, daily MACD, I like to use the fast MACD at the moment. It's already ticked below. Our lines have already crossed. So the daily is telling us the pullback is already strong. Cycle high. We haven't hit the cycle low yet on the daily. So I do expect prices to fall on the XBX 500 in the next coming week. How far the pullback would be, I'll be looking for this gap that we had from last week to be closed right here. So somewhere around the 21 EMA is what I'm looking at to see whether we do come find support here. And if we do find support here, I'll be taking a long position. Uh, you know, yeah, I'll be taking a long position because the weekly hasn't given us any signal. So key to watch this week is this level, whether we get support here or not. Last week I was looking at it, we didn't get it, and I'm still looking at it until we get it, or until it gives me otherwise another signal. So that's my take on XPX 500. I would examine silver and gold as the last two assets in this analysis. Okay, and so here is a chart of gold also on the daily chart. We will look at the weekly in a minute. But on the daily chart, as you can see, this huge reversal candle is still in place. It's still enforcing the downward trend. We broke below our 21 EMA on the daily chart. This candle, which was a Marabuzu candle, could not even still sustain a move above it. So I'm still bearish on gold. I think gold would continue its move down. Target wise, I'm still expecting gold to come to this target level of 38.26 probably in the next coming week. However, if we do break a candle open and close here, then I would expect price to either make its way up to this invalidation level. So this is where I would say that, okay, maybe this just a pullback and a continuation on the higher time frame rally. Okay, so this where my invalidation level is on gold. If price makes it above this level, somewhere around the 41.61 level, candle open and close here, it means this is a sharp pullback and we're going much higher. I don't have that much higher analysis yet, so I cannot tell you how far that would go. I haven't analyzed that yet, but obviously, if you go to the 4 hours double top is still in place. We're still trending below our 55 EMA here. And again, for me, early signal would be a candle open and close above here. I probably would even wait for the invalidation level if I'm holding a short position on gold. So that's my take on gold. Target wise, I'm still expecting this 38.26 target to be reached in the next coming week. Let's look at silver next. All right. Well, the story on silver is not much different from what we looked at on gold. We still have our shooting star with the bearish engulfing candle from last week in place. Our closing on this week, though one would think this is a reversal candle because of the long week, the closing is very important. All right. So where do we close? We closed right about where last week we closed. All right. So last week candle closed right here. And this week, even though we opened here and we came all the way down, we closed right about here. It's, in my opinion, more like the participants are still holding this level. All right. Now, this is not a reversal candle for me. When you move down like this and you close like this, you weren't able to even push into the bear camp. Take it like a soccer game. The ball just went to the other person's goalpost, but they were able to defend the goalpost and push back to the center line. So they only at the center line. So the energy flow, it's kind of still at the center point. But who is the dominant player here? Is this bearish engulfing candle? All right. So let's keep this in mind. Whilst I look at the daily, um actually, let me look at the monthly chart, see what the monthly is looking at. So yeah, so the monthly is giving us a strong shooting start since is the end of the month. All right. So could we potentially push slightly into this week? It's possible, but very unlikely, as it's overstretched outside its KC band and its Bollinger Band. I don't see this being sustainable on the monthly time frame with this candle that we just formed here. That we're going to form another candle right up here above it. Not likely. So bearish analysis on silver as well, similar to gold. And I see it on the daily chart. Okay, so we moved strongly down, had a reversal candle right here, pushed up. This is the Fib 3.8 retrace from the high to the low. And we're showing some reversal, some bearish candle here. If a candle, of course, opens and closes above this level, I'll consider the bearish case scenario invalidated, as we potentially be hitting the 0.618 retrace level as well. But I wouldn't want to risk that much capital for me. Invalidation level is a candle open and close right about here. As is we consolidated here is the 0.382 also Fib retrace. So based on this daily chart, I think my target wise is still to the downside. We bounced off the low cycle. We are almost at a high cycle now, and I think this is probably just going to turn down and continue to make another cycle low. So I'm a bear on silver and gold in the next coming week. Target wise, I think silver still would make it up to the interim target that I have for silver. Oh, I didn't put this on the chart. Um, I think definitely silver. If you put a Fib extension here, let me do that whilst I continue doing this recording, because I apparently didn't do that before presenting my analysis. So this is the Fib extension here, and I'll be expecting at least somewhere right about this level. 43.96 will be a target for me on silver. 43.96 will be a target for me on silver in the next coming week. And like I said, if it doesn't happen this week, it probably would take time, because breaking these moving averages is not it's no joke. All right, these moving averages are big institutions tracking these for their own investment, and they usually defend it quite well. They also use the opportunity to distribute and sell off their positions. So obviously, we might consolidate right here, go sideways for a while before the move down. But definitely we'll be looking at this fib target of the 42.96 is what I was looking at. Yes, 42.96 right about here, right? Yeah, right about this level. And ultimately, I'm expecting silver to make it down to this level, but let's go week by week. All right. So without much ado, I think this all the analysis I'd like to present this week. I wish everyone a great trading week, profitable trade for everyone. Risk management is always a reminder. Make sure you are putting them in place, because whilst we do this analysis, they're subject to change, and if the chart do change, you don't want to be on the wrong side of history. All right. Have a great trading week, everyone. Cheers. Bye. Thank you for listening and unlocking trade ideas and insights with us. One candle changed everything today. I hope you can already see how today's analysis can transform your trading decisions. If today's breakdown helped you spot opportunities or potential risks you would have otherwise missed, Please consider subscribing and imagine what we will uncover together next time. Kindly give the video a like and share with an investor or a trader you care about. They would thank you when it saves them from a bad trade or a missed opportunity. Until next time, keep unlocking profit one candle at a time, and we'll meet again in the next video presentation. Cheers.